Welcome to our weekly Forex and Futures forecast. My name is Jay Norris. I teach the art of market analysis and trading at Trading University. First market we'll take a look at will be the Australian US dollar. You see the Aussie dollar here on the right side. You actually closed below support. See that horizontal line? That was support level there. You closed below that. Essentially, you're shifting that 10 to 12 day pattern south. So 10 to 12 day pattern shift south. That means that's going to green light day traders to go back in there to selling rallies. Overall here you can see you took out a trend line. What that means is the risk goes from being short this guy to now being long. The risk being long here, essentially that's why you're shifting. Your day traders now will be selling rallies. So we're not going to argue with the patterns there. If the charts are telling us to sell rallies, that's the way we're going to go here. So back on the short side in the Aussie. Next market, dollar Swiss. Dollar Swiss, you're still pinned down here. You're still pinned lower. We like buying dollar Swiss here below 97, even from a long-term trader's perspective. You know, I think looking at this chart, we're probably just going to need a little bit of time here for this market to consolidate, get comfortable above those levels, essentially get comfortable not going down. Currently, momentum is still down. The majority of your short-term patterns, the majority of your intermediate-term patterns still down. Traders still focusing on selling rallies in this market. From our perspective, though, you're at long-term support. You can see the support line, the horizontal support line just above 96. We love accumulating that market down here, and essentially we're in accumulation mode here in line with those long-term patterns. You know, again, I think it's just going to take some time. And time can shift the pattern just as easily as price can. In fact, many times the time shift would be even more powerful. I'll give you an example. A week from now, let's just imagine this market does nothing but go sideways for a week. Well, when you look back over the past 2 weeks, over the past 10, 12 trading days, if you have an uptrend, therefore that pattern is bullish, right? So time can definitely help markets crawl out from underneath resistance. So I think that's something you have to watch here in the dollar Swiss. From our perspective, yeah, short term you're still selling rallies. On the other hand, we don't think that's going to pay dividends given longer term support is more relevant than those short term patterns. Next market, the dollar index. Dollar index, to me that's the pattern, and really same thing in the dollar Swiss too. You see that short term pattern. I'm looking back, 10, 15 day pattern, basically the 12 day pattern we'll call that. And that 12 day pattern's still down. So as long as that pattern's down, then day traders, particularly if it's down in line with that intermediate term pattern right there that you're seeing. So you got the intermediate term pattern down, you got the short term pattern down. Really, from a shorter term trader's perspective, you don't have much choice but to be selling rallies. As a day trader, you're selling rallies. And here's what I mean, where time can help a market crawl out from underneath that resistance. Time can shift the market for sure. Imagine a week from now the dollar does nothing but pretty much goes sideways, maybe sideways slightly higher. Well, then you look back and that short-term pattern has shifted itself. Time has helped shift it back bullish, and we think that's going to be a big event when time or price, however it plays out, however this short-term pattern shifts back to bullish. That's going to be significant because I think it's going to put the market in a position where it can shift then that intermediate term pattern and scoot out there, and you see the long-term pattern is definitely bullish. So looking for a short-term shift in line with the long-term shift. Then I think the market's in a good position to challenge that bearish intermediate term pattern. Basically, I think a short-term pattern shifts everything higher, and then you're off to the races on the upside just in time for the big spring business breakout in the U.S. Next market, the euro. Similar story here. Again, you get a short-term shift. You're very close to it too. It held it the last couple of days of the week there, Thursday, Friday. It barely hung on to support the euro there. But again, look at that short-term pattern. Look at that 12-day pattern. If that shifts bearish, it's going to shift bearish in line with the longer-term pattern, and I think everything shifts south from there. Again, timing being everything here, just in time for springtime in the U.S. as business starts to pick up, as everything starts to bloom. Likewise in Europe too. So all eyes on this week's trading. We'll have to see if that comes to fruition, if this short-term pattern does roll over, shift bearish in line with the longer-term pattern, and I think things really start moving these currency markets. And again, I'm sorry to sound like a broken record, but really when you look at the big picture, you look at everything aligning here fundamentals, it looks like more dollar strength to come. Gold market next. Gold been a bit of a leading indicator on the upside. Here's what's significant about gold to me. You did shift that short-term pattern. If you go back 2-3 weeks, that pattern is now bearish in the gold. Gold led on the way up. Potentially, it's leading on the way down now. So those patterns we were just talking about in the U.S. dollar, in the euro, those short-term patterns were waiting to shift in line with the longer-term patterns. Well, that's already happened in gold. Gold has already shifted that short-term pattern in line with the long-term pattern. So we definitely like selling rallies in the gold market. One level to watch in the gold, though. See that white line? That's essentially the low of the highest closing candle on the weekly chart. For a weekly change of direction to occur, here's the weekly chart. There you can see the primary pattern down in gold. Really, for a weekly shift here, you're going to need to get prices below that level. So that white line there in the gold, a little bit of a sticking point. Essentially, this week's low. We think it's only a matter of time before that occurs. And you know, speaking of gold, and I had mentioned before the fundamentals. Here's the biggest fundamental out there. It's demographics. This is the graph, the U.S. demographics. On the left side, you have the male population. On the right side, you have the female population. This is the pyramid for 2017. I actually prefer to look out a little bit further. I prefer to look out 4 or 5 years. Anyway, this graph makes the point. Who makes up the biggest percentage of the U.S. population right now? Well, this chart is very important to us because it tells us. Come down here. This is the male side. Look at that. 25-year-old males are the biggest demographic in the U.S. right now. I want you also look at this group from the 25 to 35-year-olds, young men. They outnumber the men from the 50 to 60 demographic, right? So your biggest part of the population are younger men here, right? Quite a bit of younger ladies too. What does that mean for us? Okay, well, I was just looking at a gold chart. Do you think men in this age group from 25 to 30, you think they're worried about buying gold? No, of course not. They're going to invest in what they know. They're starting their careers out, or they're starting to advance in their careers. They're looking at buying homes. What do you think they're going to be investing in? Well, they're going to be investing in their homes and their families, essentially. Okay, this group of people right here, it's their wants and their needs and their investing habits that we're going to want to focus on if we're going to continue to be successful as investors and even traders, right? We want to know what they're interested in buying, right? So as time marches on, this very important demographic right here, they're going to become less and less important, right? It's inevitable as they get older, they become. Time ensures that they become fewer and fewer, and it's these lower demographics that again become stronger and stronger. So back to the gold chart, do you really think these young people are investing in gold? No, they're not. They're going to have completely different needs and wants than the previous generation that was big into gold. Gold, you know, used to be a great fear indicator. I don't know, maybe it will become again, but to me, I think that it's demographics, and demographics, by the way, always the most influential market fundamental out there. Demographics pretty much ensure that gold will continue to be a relic, right? And it's funny, speaking of demographics, if you look at the political climate in the United States right now, a lot of people are saying, wow, that's been really crazy if you look at what happened to the Republican Party. Well, the majority of people in this age group, they're not really Republicans, are they? The majority of people in this age group, they are actually Republicans, right? So when you look back at what happened in this political cycle here now in 2016, when you look back 5-10 years from now, and we know what's going to happen with demographics, well, the biggest part of the population, the 25 to 35-year-olds now, well, they're going to be 10 years older. And the majority of the people, the 50 to 60, they're going to be 10 years older also. So these guys are going to continue to grow. This demographic is going to continue to shrink. So 10 years from now, when you look back at the 2016 business cycle, it's really going to have been nothing better than fodder for late night comedians, because it's all going to be forgotten about, because essentially, and it's the same thing for markets. If you have the attention of this demographic, then this demographic really doesn't matter so much anymore, right? So as a trader, definitely as an investor, you have to get your mindset around this, that what folks up here say really doesn't matter so much is what folks down here do, right? So again, back to the markets, I mean, that really spells to me the death knell for gold, right? Because young people, they're not interested in gold, right? They're interested in what they're interested in. Their houses, their cars, building families. When you look at a long-term picture of gold here, to me, there's still plenty of room on the downside, and unless you somehow are to gather the interest of younger people to invest in gold, which doesn't seem likely to me happening, then there's probably more downside than upside in the old yellow metal there. So my overall point, demographics favor a continuation of the bear market in gold. And by the way, young people, they'll probably very much have a different view of government too. You look at the older folks here, and they tend to be more distrustful of government. But if you look at what's happened over the last 10 years or so, as far as quantitative easing, and you look at the role that government has played in the previous economic slowdown, the people, these younger people here, they may have a completely different opinion of government. And if you look at the 2016 cycle here, to me, the big story is not necessarily Donald Trump, because he's basically supported by this demographic up here. The big story was the popularity of Bernie Sanders and all the money he raised by focusing on this demographic here. So whichever party has that demographic is pretty much going to control not just the White House now, but going forward, all apparatuses of government, it's the Congress, the Senate, etc. So demographics, very, very powerful. So gold, not a whole lot of upside left here historically, right? Last market we're going to cover, U.S. interest rates. There's your daily interest rates. You can see interest rates finally picking up here. You had a little bit of a scare. You had a shakeout in the U.S. stock market. You had a lot of uncertainty in the U.S. political cycle, and that really led to a weakness in the stock market. Likewise, interest rates trading lower here. Pull out to a weekly chart, and here we really get perspective. We see it again. I've said this many times. We see this as a long-term bottom in U.S. interest rates here, right? And what's going to happen once you have that long-term bottom, once interest rates start to creep up a little bit, once the Federal Reserve okays higher interest rates, then you're going to see slightly higher rates. You're going to see a normalization of not just business conditions in the U.S., which you're pretty much already seeing, but also globally too. And who's going to get credit for that? Central bankers, governments, right? And who's going to see that? Which demographic, again, is going to see that as being most important, and which demographic is going to be most supportive of those policies? It's going to be these young guys here. So, hey, it's the young people here on both sides here, and their mothers too, by the way, the mothers of these young people. That's that demographic right there. They're still pretty influential too. So all joking aside, you got to focus on what young people are looking for, what young people want, and you really don't have to look any further than some of the political polls out there, and just look at all the money that a guy like Bernie Sanders raised. My name is Jay Norris. I teach at Trading University. Hey, thank you so much, and we'll see you next week.